We're doing this to create a multi-generational wealth effect. It's going to help us today in our own real lives, but I'm trying to clean up a mess that hasn't happened yet for my kids and my unborn grandkids and great-grandkids. There's all this spending going on. There's all this multiplying the money supply. Our dollar's losing value every single frickin' day.
Then you get to control the terms of repayment and how that deal flow works. So depending on the strategy you're using for real estate investing, that level of flexibility can really change your results quite dramatically.
You're building an asset, and it's an and asset. So if you think about it, from a real estate investor perspective, you got this other asset that you're actually building, and it works so well in conjunction with each other.
Hey, this is Cole from Life 180. You are in the right place if you have any questions about infinite banking use case. As the industry has matured, and I've only been kicking around for maybe 2 or 3 years, we have seen the demand, your demand, that you have been asking us for critical data. What is infinite banking good for? How can I use it in my life? I have 3 authorized infinite banking practitioners with 3 different perspectives on how infinite banking can be used in your case. We're going to talk about IBC use case. Liz Lamond, Vern McCarty, Dan Allen. All right, here we go. We're going to ask the question. Ladies first. Liz, IBC use case. What is the best use for infinite banking?
Well, to stick onto the line of real estate investing is using it as an and asset. So in conjunction with your investing activities. So having something that can provide a cushioning effect for your investments, having something that is growing and has some guarantees while you're on a, roller coaster ride with whatever else you're doing, and having something that can provide a level of protection for you and your family, and access to liquidity, just is a game changer for investors. And, speaking personally about real estate investing, certainly changed everything that I was doing in terms of more effective use of money for, cash flow reserves, what I was doing so that my money wasn't only doing one activity, it's now doing more than 2 at least in moving for me, and so then therefore the results that I'm getting from my investing.
All right.
Nicole, are you able to drop that mic? Cole, or
yeah,
no?
the mic is dropped. It's on a boom. I can just drop it like that. The mic has been dropped. So we'll just end the video there. Yep. There's no point in talking to you, Vern, or Dan.
Exactly.
This is Cole signing off from Life 180.
Well, I learned everything from Liz anyway, so, whatever.
Good job.
Vern, you had the fist pump going. The question is yours. Use case for infinite banking. What the heck do you do with it?
Oh, man, I thought you were going to go to Dan, but that's okay. Dan sent me all his notes, so I'll just give you his answer. This is a great question. So I'll actually share a great example that I just use my own system for on a regular basis. This is what I coach families and business owners around. Of course, it's important to have some type of a specific objective, in mind when you get started with the process. I'm fortunate enough and blessed enough to say that I've gotten to the point now where my system is robust enough, it has enough capacity where it can meet all of my financing needs. So what I do is I actually access a policy loan on a quarterly basis. So instead of using my own money, I'll access a policy loan from my system. I'll borrow the money from the life insurance company. I use that to fund everything that I need for my family, for my household, my gas, my groceries, my light bill, Lego addiction. As you can probably see in the background, I spend a lot of money on Lego. and then
it's a solid investment, right, Vern?
Yeah, man. Hey, listen, you know what? If you're going to buy a toy, Lego holds its value. But then I use it to pay for my business expenses as well, right? Business has a cost. Everything has a cost. And to Liz's point, if there's an investment opportunity or whatever comes up, I'm using my policy values to finance that as well. You might not be able to do that out of the gate, but that's to the point where I built my system. It depends on just how much capacity you have. And now that I've satisfied all of my needs for income and business expenses and all that sort of stuff, when money gets deposited in my bank account on Friday, I actually have no use for that money. Well, of course I have a use for it, but you get what I'm saying. I don't need to spend it. I'm going to take it and I'm going to pump that energy right back into my policy system to help make the companies that I'm a co-owner in more profitable. Transfer that financial energy, just like Nelson taught us.
Yeah, that's an absolutely amazing answer. I love it. And I love how you tied it to your own use case. And I think that's the ultimate. We could do a whole series, and maybe we can even get a little bit into that today. The ultimate use case is our use case. And so the viewers can, learn. And, and I always say, Dan, before I pass the question over to you, if you're interviewing an infinite banking expert, not only, should they have the qualifications of being at the Nelson Nash Institute, but ask them, more importantly, to show you a policy. How are they using it in their own? If they can't queue up a policy and share their screen and show you a policy, if they don't own it, it's a deal breaker. Dan, the question is yours. Infinite banking use case. Can you render it down and hone it down into a specific example, and how are you using it in your life?
Yeah, so that's a great question, Cole. And just going back to what you're saying and what Vern spoke about and Liz, it's like when you ask me about a use case, I just go back to, everything. Like, you can effectively use this for everything in your life. And the first thought that came to mind, though, as you put this question in front of us today, and I was just thinking about our farmer friends out there, and I just went to, what's one good use case when it comes to agriculture? And the one I really find works effectively for farmers is the operating loan side of it. And the reason that I find that such an effective fit initially when people are farming and they look at implementing this in their life is that they're already used to this cycle where, at the start of the year or whatever, depending on what kind of production they're in, they have these high input costs. And so they typically borrow money from banks. And the reason why they have to borrow money from banks is that they haven't gone through this capitalization phase that the banks have gone through. And the banks have done a great job of setting up the structure. So they got access to this pool of money. And when you come along as a farmer or whatever else you're doing in life, you can access that pool. And they're going to charge you interest and fees and all those good things. And why shouldn't they? They went to all that trouble. And so when I start to think about operating loans and farmers, if you can start to gain control of that, and it works extremely well. You put in, you start to capitalize, you can access part of that amount that you've capitalized in the first year. And typically within 7 to 10 years, depending if, a person has the right mindset around capitalization, they can end up owning their own operating loan. And with farmers and a lot of other businesses, the input costs are just getting higher and higher. So the more control you have over that, and that's really the beauty that comes with this, is like when I have conversations with farmers, what's one of your pain points? And they'll come back with, when the note comes due on my operating loan, it may not be the ideal time for me to be selling my crop or my livestock right now. So, but I feel that pressure. I got to sell at least enough to pay off the note. So, farmers, lots of cash flow. And if they can just learn to use this system to help them over time, they own their own operating capital. And then it just puts them in a different position altogether. It changes the outcome for them over their lifetime and on to the next generation of farmers. So that's what come to mind when I thought about that question, Cole. So I hope that's an answer that will help people.
Yeah, that answer will help people, and 100%, Dan. And Liz, Dan made a lot of very critical comments about the use case around farmers, real estate investors. Does it resonate with them as well?
Absolutely. I mean, the same point of funding and capitalization, having access to liquid capital when it's needed for opportunities. I think one of the big pain points of real estate investors is just not having control over how they use their money. So sometimes it's hard to refinance properties, or it gets difficult to get more mortgages from the bank once you hit a certain cap of number of mortgages, and people get pushed into commercial loans and having to use joint venture partners and all sorts of other strategies. And so that causes difficulty in terms of growing a real estate portfolio. So having that same mindset as what Dan talked about with farmers, of having that period of time to capitalize and be building one's own system in conjunction with investing, then the result that you can achieve in over a period of time is that you can then start to provide your own financing, and then you get to control the terms of repayment and how that deal flow works. So depending on the strategy you're using for real estate investing, that level of flexibility can really change your results quite dramatically. Because to Dan's point, sometimes it's not always the optimum time to have to sell an asset, but if you don't get to control the banking around that, then you may have to make that choice when it's not, optimal to do so. So that in itself changes the results that people can get from their investments.
Hey, Cole, can I jump
Yeah,
in and
Vern,
ask Liz a
absolutely.
question? Liz, that was awesome. Dan, you crushed it. That was so good. Hey, Liz, just curious, for real estate investors out there, when we go and apply for a mortgage at the bank to get a rental property to create cash flow, to create more wealth for our family, we're the first ones in the deal, but who gets paid first?
I don't know. Who do you think that is, Vern?
Oh, the bank gets paid first. Okay, great. And then you had mentioned, once I get to a certain point, I'm leveraged, right? On paper, I have all these mortgages. The bank might not lend me more money, right? Mm-hmm. But if that mortgage debt or that leverage or loan exists, it resides within my own private banking system, within my policy system. Last I checked, that doesn't show up on Equifax or TransUnion, does it?
That's right. It's a private arrangement, so it doesn't affect that debt service ratio.
Interesting.
Yeah.
Interesting. And we all know that everything that a bank calls a liability, we call an asset, and everything that we call an asset, they call a liability. Right. So if I become the banker, I could transform my liabilities into assets, because liabilities create a stream of payments for banks, right? So I think it all works pretty good, Liz. That was awesome.
And I think another thing that, as a real estate investor, I can appreciate is that this is an asset you're growing that doesn't come with tenants or toilet issues.
Totally. Tenants, toilets, and phone calls.
So something that has guaranteed growth and is something that you can create that will provide passive income, to your point, which is why people are investing in the first place, Vern. And so having an additional asset that gives all the things that you just talked about, plus what could eventually generate passive income without those, 11 p.m. phone calls, which I think most of us have experienced, then, what's not to love about that?
Totally agree, Liz. And I always think about it this way. So whether you're a real estate investor, whether you're running a business of some sort, doesn't matter which business, or your own private financial well-being is your focus, you're building an asset, and it's an asset. So if you think about it, from a real estate investor perspective, you got this other asset that you're actually building, and it works so well in conjunction with each other. One, I always tell farmers, this little asset's going to augment what you're doing on your farm. It's a real plus to what you're doing, and it just becomes part of your portfolio, and it's going to come with certainty. And it comes with certainty, whereas pretty much nothing else, and especially, a lot of businesses, but farming, there's very little certainty. Like, am I going to get the rain? All those kind of things that are unknown. This has got a high level of certainty, and it's just one of the things that I love about the asset.
Yeah, and I think that's a really good point, Dan. I mean, there's seasons for everybody, and so Vern, maybe you can talk a little bit about the seasons of families. There are things that change for families as well, right? In terms of it's not just business owners, it's not just investors, it's not just farmers, but everybody experiences ups and downs in what's happening, in other parts of their lives. And so this is something that can provide some cushioning for that. Maybe you can speak to that a little.
100%, Liz. Really well said. Well, what we always try to find out with our clients when we're chatting to them, hey, Dan, tell me, what's a normal month? What does it cost you to run the household every month, right? Well, we certainly know that July is a heck of a lot different than December, isn't it? Yeah. Maybe February is different than September. Back to school shopping, all those expenses that come. If you got kids in university, we got books, we got tuition. I was talking to Liz the other day and I shared an example. The guy came knocking on my door and said, "Hey, we're paving your back alleyway for a couple $100 extra bucks. We can bring that all the way up to your garage pad." A lot of families, you ask them for a great opportunity like that, they're like, "Gosh, I wish I could do that." But guess what they don't have? Ready access to capital. So when things like that happen, when the seasons change in your family, what do people do? Well, they grin and bear it. They just go, "Oh, yeah, I got to put that on the credit card and I got to do this and I got to do that." And I spoke to somebody just yesterday and they told me, they're like, "Vern, I totally get it. And I got to carve out some capital to get started," because the problem is exactly what they said to me. The problem is every time I get a little bit ahead, something shows up and I go backwards.
Yeah.
So yeah, hopefully that adds a little bit of context to the seasons that occur within families, right?
Vern, that's well said, and Liz, and I love the dialogue. And I'd like to take it a little bit more personally now, and we're talking use case today. And if we're thinking about use case, Vern, you just made me think about the use case specifically that you described. Is it gave you the opportunity to be flexible? You have the liquidity to be able to pull the asphalt right up to the pad, and you're able to access that money. Now, when you're using 3 infinite banking practitioners who clearly practice this in their own lives, using it every day, when you need access to that capital, you need a couple $100. Where does that money come from? And we can talk about investing real estate properties and farmers managing debt loads, and Vern businesses running cash flow through their policies, and we understand the tax benefits to this and the generational benefits to this. But Liz, how do you access the capital? How do you, if you need that $200, say, and the guy's standing there in the driveway, but you're practicing infinite banking? What is the mechanism? Let's give our viewers some real use case. How do you get the $200 to the guy?
So yeah, thanks for asking. So you have a guarantee that you're able to take a policy loan. So that involves either, depending on the insurance company you're using, it might be filling out a form or making a phone call and requesting to use money against your cash value. And then that shows up in your bank account that you use for the convenience of debit a few days later, just depending on processing times. But generally, in my own personal experience, I usually find it comes about 3 business days later. So, it's pretty quick. And so you would have the opportunity, if you knew that was happening ahead, or you could use a credit card temporarily and then pay back your credit card for the expense that Vern was talking about, so that you're not going behind, and that you're going to have a way to pay back that credit card debt and not create yourself a 20% bill because you won't be able to pay the credit card off at the end of the month.
The nice thing about this group of people here that Dan Allen is actually a compliance expert as well. So we start getting into these kind of conversations that Liz brought up about OPM. And leverage. I mean, often, unfortunately, the word leverage in the traditional financial industry carries a ton of risk to it. Dan, in the world of, say, infinite banking, does leverage carry as much risk as it were in, say, the traditional fiat realm of, as we understand leverage?
Yeah, that is a great question, Cole. So I think that, and I always, when I get that question, I just help people understand that, say you take, just like Liz was talking about, you take this policy loan and you actually use it for something that is what would be typically considered to be a riskier venture. So say you put it into a stock market opportunity that you have. So then you have the volatility of the stock market. But what you have, your foundation has a guarantee, and it's guaranteed every day that value is going to keep on going up. So it keeps on going up, and say, you've got this investment out in the market at some point and it goes down a little. Well, you've got this really unique function that this is cushioning that impact of going down. So, that's what I like about, what we do is we've got that foundation that no matter what else, it's a guarantee. It's a contractual guarantee. It has to keep on increasing in value. So yeah, even if you put it into something and it didn't do as well as you hoped, you've actually cushioned your financial well-being to some degree. It's not all is. If that investment went to zero, hey, sorry, that's not ideal. But it really changes the outcome for you over time because you've really reduce the impact of that lever if it goes the wrong way for you. So it's just a great, kind of process that helps support whatever else you do in life, because everything you do has some risk to it. So it's just a great foundation.
Vern, Dan used the term over time. Speak to us about time. It's Liz did a great job unpacking. How does the guy, or in this case the road crew, get the money? Dan broke down Dan, it almost sounded like the opportunity cost of not being leveraged to some degree, if you could say that. And he also talked about time. So Vern, time. What is the non-elastic relationship that we have with this thing called time? What time? How much time does it take? How much time does it take to get the guy in your backyard paid, or the leveraged, or that OPM, or that and asset product, or that secondary asset funded? How long does it take? Talk to us about time.
Holy snap, Cole, that's a great question, and really a loaded question. And I want to, hopefully I can tie all this in for you. What I always say to clients and people who are considering this process is I say, look, the time's going to go on anyway, right? People say, oh, because everybody wants instant, right? Like, how quick can I start using it, and how, when's it going to start working for me, and all this kind of stuff. And to your point, Cole, I think Dan might have even mentioned earlier, look, if I capitalize my policy, let's assume that I'm just going to deposit one time annually every single year. I'm going to put in X amount of dollars into the policy. The way that we structure the policies is such that when I make that deposit, I can immediately, literally within the very first month, I can already start accessing capital in deploying that in other places. To Dan's point, what if I see an investment opportunity? Like Liz, if I can put that money somewhere, maybe I can lend that money to somebody, create a cash flow. Now my capital inside my policy is growing every single day. And now I have cash flow from that private lending deal that I did. I'm literally growing my money in two different places for the same premium dollar. Okay, we're using the word leverage. That's kind of leveraging sort of like banks do without expanding the money supply. The life insurance companies can't do what the banks can do, where they can just expand the money supply and make this money out of thin air. You talked about time, Cole. We're doing this to create a multi-generational wealth effect. It's going to help us today in our own real lives, but I'm trying to clean up a mess that hasn't happened yet for my kids and my unborn grandkids and great-grandkids. There's all this spending going on. There's all this multiplying the money supply. Our dollar's losing value every single frickin' day. What's that going to look like expanded over time? So if I can pump money into a system that my deposits will never catch the amount of cash that grows in that policy system. I'll always, after, like Dan said, well capitalized 7 to 10 years, there'll be more capital in that policy than I can ever pump into it. So how important is it to get our money working right now so that I have access to more capital 10, 20, 30, 40 years down the road?
There you have
That's
it.
awesome.
The thing I want to extract out of what Vern just said is cleaning up a mess that has not happened yet. We're gonna leave it there. I don't think we could go any further for this video. I think that just bookends it perfectly, Vern. We're cleaning up a mess that hasn't happened. We're gonna be back with Liz, Vern, and Dan shortly next week. We have more content coming from them. We're gonna continue to get deep. We're gonna continue to unpack and identify use case. There's a subscribe button. There's a little thumbs up thing. Go ahead and hit that. And more importantly, leave a comment. You can ask Liz, Vern, or Dan a specific question in the comments. Obviously, in the notes, you're going to see how to get a hold of them. So get out there and think about rethinking your relationship with your money. Have a great day.